Good morning. YouTube studio. Where's the Roblox CEO? Live. Live chat. It is Thursday, February 8th. So if you're tuning in on any other day, morning, Evan. You might be disappointed if you're tuning in on another day. We were not able to save your video. Okay. Let's see. Not available. Why not? Let's see. I think I'm still live. There we go. Okay. It's streaming live. Where are my notes? Morning, Joe. Morning, Scott. Where are my notes? There we are. Let's see. I've got two. Holo and H kit. Okay, hold on. I'm going over here to YouTube. An Oreo cookie. Live. There we go. Daddy just got paid. There's a commercial going on. Commercial ends soon. Let's go over some scans. That's what I want to do. Okay. We're gonna go strategy tester. What a freaking nightmare PayPal is. I'll go over it. I'm out. I haven't sold it yet, but I'm out. I'm getting out. No reason to stay in. It's in pre-market. It is trading at 57.87, which is below the 200-day. Yeah. Yeah, probably no reason to stay in. Disney, I'll go over, Scott, and if I don't say it, if I forget to say it, because I didn't write it in my notes, but if I forget to say it, here's the thing. Understand, Nelson Peltz is an activist investor, and he is the one going after Iger and the board. He wants board appointments. And so that vote is coming up in March, the board vote. He wants a new board of directors. Understand, Disney put everything in the kitchen sink into this earnings report. It worked. It brought the stock back up. People are excited about it again. But I would completely expect this stock to go back under 100. So I continue to say anything over 100, I think you can sell it. Anything under 100, I think you can buy it. I do think that this company as a long-term, I think it's a great long-term buy. I think anything under that 200-day, you are completely fine buying. I mean, even the monthly chart, if you want to look at the monthly. You're using the 200-day on the monthly as a sounding board. I mean, that's essentially what it is. This is 2008, 2009. The world wasn't shut down. The world was shut down here, and you're trading at those levels. In March of 2020, the stock went to 79. Its high was 121. So, and it took off from there. And then you've seen that slide, and we've started to come back. So, morning, Mike. I would just be a little bit, skeptical of this particular quarter being, oh my God, it's amazing. Things can't go wrong. I'd be a little bit nervous of that. But with that, ironic that we got another cross up of the MACD yesterday in the Qs. Why do I have to go over all of these to bring them back up? We're going to go over any brokerage holdings that I have. IGM. Morning, Rabid Badger. I hope your rabies gets better. I don't know that there's better places for your money. Again, I'll go over it because one of the things that I really want to go over is where your money is in today's episode, because Josh Brown said it so brilliantly yesterday. He goes, in this market, why do I want to own my 20th favorite stock? I mean, why should I own my 20th favorite stock? Why am I not just going into my top 19? Why do I have to start a position in my 20th favorite stock? And it doesn't make sense. In this market, you take what's working and you go after it. I think technology's working, and so I think that's where you go. You just got to be careful because there's good technology and there's overpriced technology. Now, I don't mind buying NVIDIA at 696 right now. It's under 700. It's shown that it's got 700 in the bag. It's shown that 700 is possible. So you're buying at 696 knowing that you have to go to all-time highs. Do I think it's going to all-time? I do. I think, NVIDIA at the time, let's see what their market cap is. Because I think NVIDIA, I don't think NVIDIA right now is a $1.7 trillion company, market cap. Do I think NVIDIA is going back to a $1 trillion company, or do I think it's going to become a true $2 trillion company? I think it's going to become a $2 trillion company. So that's just my take on it, that I think, again, Goldman has just put an $800 price target on it, and you're buying just under 700. Its average target price is 687. Next earnings are going to be super, super key. So, but in my mind, I think that's where I'm kind of going on it. Devo, KNG, TJIA, QYLG. A lot of covered call ETFs got the cross up, but I'll go over it a little bit. I'm horrible at doing other stuff. Wow, there's a lot of we got it an LICY. A lot of energies crossing up. Gene Munster's on. Lever. Bulls. HIBL, which is the lawn. TQQQ gets a cross up. UDOW. DRN. Low cost ETFs, VSS, VBK, RSP, QQQM, VIG, VO, QQQ. We got a lot of cross up yesterday. And we're going for S&P 5,000 today. XLB, materials. I think that's XLRE. Materials and real estate are the two. Materials. After a nice little downturn, maybe that's a sector. Pavin. So you've got to put it into your mind. Is it short term or long term that you're looking at? If you're looking at a short term and it's overbought, and you're looking at a short term buy, you don't want to buy it. I'm not looking at RSI as a buying decision right now because I'm looking at, okay, it's a $700 company, it's a $700 stock. If they report the same quarter as they did last time, then it's probably a $600 stock. If they grow at 18 to 20%, it's an $800 stock. So I'm not looking at okay, I want to. And remember, don't think that we can see it. It's overbought. I mean, look at it. Do you want to initiate a buy here? No. Do you want to add to your position? Absolutely. Would I be starting a position in NVIDIA right now? No. Holo, and Scott, if you're interested, HKIT. Those are the two I have at the top of my notes today, by the way. But Pavan, it's not that I changed my mind. It's overbought. Here, Pavan, this is RSI at 69. Okay, it's overbought here. The high was 543. Did you want to buy it here at 543, even though the RSI was 69? Well, yeah. Now it looks like a great buy. We can look at that one. Even better, this one. The RSI is at 70, and it was overbought. We'll just say you bought it at the high, and maybe you regretted it for a day when it was a red candle, but you're up 30% in 29 days. So I take RSI. And Pavan, if you're part of the paid newsletter, you get this. I just went over this. Take RSI as something to kind of absorb, but in my state, I don't take it as a buying decision. I mean, you just had the MACD cross up. Yeah, it's at 69. You had the MACD cross up, and the strike line's going up. So there's other things that moved this one. SMCI. This was January 8th. SMCI had, and there was some news in the market about Meta buying a bunch of stuff. So, Mike, that's crazy that you bought it. I mean, I didn't watch it yesterday, but I saw a little flash. There was something that came across the screen, and I don't know what it was, but I saw it. Dude, you guys are killing it. Goldman Sachs. We have IONQ gets a cross up. There's a question about IONQ. Fortinet gets a cross up here. It's still on that play. UPS. Somebody wrote to me that they're a zebra engineer. SMMT, which we have brought up before. Abbott, PDD, Trading Desk, Penn. We had great earnings from Win yesterday. Okay. Not own. Let's go to the Dow. You day traders, man. That's the one to lob on. Intel has a cross up. J&J. I'm out of J&J. NASDAQ 100. Take two up. ISRG, Intuitive Surgical, AstraZeneca, Broadcom, AVGO, which is down 6%. On earnings? Yeah, on earnings. We're going to take that out. I don't even want to recommend that one. That's just, that's a PayX. When's their earnings coming up? They had them. It's an interesting one. Probably gonna gap filled to 127. But I only know. That's what she said, Mike. Wah, wah. S&P 100. UPS, Abbott, Schwab. Schwab gets a cross up and a little love. AMT, American Tower. Just so everyone's aware, we got a lot. We got a lot of scans. So we're probably crossing 5,000 today. Let's go back to the strategy tester, because we can see how many of you mofos are crazy and out of your mind for getting into holo. I can't believe you degenerates got into holo. Here's the degenerate play. The degenerate play of the day. A reverse split for 1 for 10 just to keep its listing up. And then just to show you that I have the link here. Microcloud Hologram Stock Soars announced they plan to join the Communications Industry Association. It will accelerate of a new generation of information technology and integration of industry information. The association constantly promotes the technological innovation. I have no idea how joining an industry gets this one, 187.78% in pre-market. What am I saying? Let's look at holo. I don't know if they have the short interest. It's not covered, so there's not company profile earnings revisions. 100% down, 0% up. Revenue year over year minus 10%. CAGR 87%. Gross profit margin 44%, but they're still not making money. Wow. Individuals and insiders own 81% of this. There we go. Short interest 8.32. So it's not a short squeeze. It's not a short squeeze at all. But like Jason says all the time on, office hours, he doesn't care about the news. He doesn't look at, the news. This is all 100% just, and just so everyone's aware, in pre-market, this is opening up here. So these candles are amazing from yesterday, but it's opening up here. 88% up in pre-market. So, it's nuts. It's crazy. It's crazy, girl. Crazy. Yeah. Okay, let me find some. There's that one. That is already an affiliate. We have to open up Disney earnings. Oh, let me just go home. There's probably a big movers of the day. Jobless claims fall more than expected. Job market is getting better. Biggest movers of the day. There we go. I missed out on ARM, by the way. I missed out on ARM. One that I do want to look at is Enphase, because this was the article that I read. It's one to watch. It's an interesting one, because, this is one that I got out of Sedge. It's back to where I got out of it. I mean, it's back to, I got out of it around 80, maybe 90. But it's, sold October 20. October 20. So, yeah. October 20th. This, I know what this is. This is part of my, this is part of my, collaboration with, my weekly stock pick. ARM's going nuts. ARM's going crazy. But I got that one. Yesterday's performance. Holo and H kit. Social requests. Okay. I'm going to do a pretty short one today. But it's going to be more on... and let me see. I have to... Let me do something real quick. Let me log out. Sign out. And I'm going to go to Alpha Picks. Okay. 55% off. Yes, it's $89. So I'm going to take a screenshot of this, actually. Because I like this better. Yeah, I like that screenshot better. I like saying $89 instead of $99. Yeah, it's live. It's live. It's live. Let me see. This is what you should expect from Alpha Picks. Who is Alpha Picks? How does it work? Yeah. Valentine's Day special. So, okay, it is live. We're going to keep that one up. I wonder if I log in, if that one's going to go away. Nope. Okay, good. Google rebrand. I'm going to put that into. Twilio and Pal, yeah. Larry! I want to put this in. I think this is important. I think this is an interesting one. I want to try putting in a bedroom square footage with windows where they are and having AI do an interior design based on some photos, choosing colors and paints and things of that sort. So I think that might be an interesting one. Let me make sure I've got this. I've got to get, the biggest movers. Okay. So I am going to open these up. We're going to go backwards. Google rebrands itself. We'll close that. Well, I'll leave that open. Enphase announces biggest stock movers of the day. Want any inexpensive valued stocks? What about the biggest upside to the monkeys' target prices? The monkeys are the analyst. Still have room to go, according to Gene Munster. This was a good one. This was a really good one. 6 months ago, there was talk that we were at the peak of an AI bubble. Since then, Microsoft up 27%, Meta up 50%, AMD up 55%, NVIDIA up 56%. Now up, ARM is up 48% after hours. That's in and of itself. I like, this is the one that got me to buy more NVIDIA. We're in the first inning. Maybe the batter's back on AI. I mean, come on. It's a 2-minute.
On the show. I think we're in the very.
There we go. We'll turn that off. That was a great 2-minute clip. Threads, this one is a good one. I like that. This is exactly NVIDIA. Wait, I can explain. Amazon, 13%. I'm up only 2% on Apple. Amazon, 43%. I'm only up 13%. And then Tesla, wait, you guys actually make money? Oh, you can't see it. Hold on. I got to close it down because, yeah. That's an exact. We'll close that down so you can see it. And then Seeking Alpha. Okay. Let's go over here to the Qs. Okay. And before we get going, I am going to Scott, the other Scott Shipley in Facebook. Here's what he said. He bought it the first day I brought it up. But understand, I had it for like 3 days before I brought it up on air. And I said, hey, this looks pretty good. And I liked the picks that it was doing. I liked the analysis that they were doing. And I was impressed. Scott Shipley, I guess, big fan of mine. He jumped on it. He bought it like that day. So I did not get an affiliate agreement from Scott. Just perfectly honest. He bought it before I had the affiliate agreement because I was still kind of testing it out. And I just, I bring stuff up off the top of my head. This particular one, and I wrote it yesterday. And I think in the newsletter, I put it really, really well. And it's part of a video that I really want to do. And I've been trying to put it out there. But the tools that I use to make buying and selling decisions. And this is out there, and I think, my system has become clear to all the paid members about finding opportunities and buying in. TrendSpider, it's the chart and the back testing. That's the algorithms, watch lists, and more. They have so many tools that I don't even use, like unusual options, insider buys, PE. It's all graphed there for you. It's fantastic. Seeking Alpha Premium. This is where all the news articles, the comparison charts, quant ratings, analysis, recommendations, etc. The site saves me time because it's a curated list of articles and fundamentals data that I don't have to dig to find. So instead of going to FinViz, instead of going to Yahoo, instead of going to other stuff, I pay $189 a year and I get Seeking Alpha Premium. It's fantastic. And then the third tool is Alpha Picks. And Alpha Picks is super, super important for me. And it's new. It's less than a month old. But kind of like Scott says, Twilio and Powell. Yeah. I mean, that's, you can, Powell, it's going to, here, let's go to Alpha Picks. Because they've had some crazy ones that I would never find. And I haven't watched their update, but there's some crazy ones that I just wouldn't have found. SMCI did not get from there. I've had to SMCI. This Manulife Financial Corporation, here, let's do the returns. Modine Manufacturing, I would have never found it. MI Homes, would have never found it. Alpha Metallurgical Resources, would have never found it. Powell Industries, would have never found it. Uber, I found. Abercrombie & Finch, I would never invest in. But holy crap. Blue Links Holding, I would have never found it. Marathon Petroleum, I knew about it, never invested in it, probably should have. That's been one that's probably been dead weight of recent. United Rentals, I would have never invested in it. Celestial Inc., never probably would have invested in it. And we can look at just the dates that it was picked. Twilio, I would find it, but they're down 2.88%. I'm saving 2.8. PepsiCo, I don't know if they made the right move on PepsiCo. That's a little bit one. This was a second buy that they had for Modine. And MIH Homes, you're down 2%. But I'll add to this one. Comcast, you can see they just do a buy about every couple of months. It's not for day traders. This Manulife Financial, I mean, shit, they're up 30% since November. That's great. AppLovin, I know about. I never would think to invest in it, but now I like it. Now that it's a strong buy here, they're up 12%. It's not to run too much. So, Scott, I will tell you, if next month is your renewal on TrendSpider, I doubt that I have a renewal. Just understand, I get a recurring as an affiliate, and I don't know how much I'm supposed to say, but I do get a recurring. So when you renew, I get an affiliate spiff on that as well. I don't know if I'll have a deal for you. And the problem with it is that they have gone from those 3 tiers down to that 1 tier. And they even changed it monthly, yearly. They changed it around test drive. They're testing some stuff. But I don't know that I have a deal for you, but I will say go into the bottom right, go contact me, and they may have a special offer to give you. And it would keep you on the affiliate link, so I'd still get a spiff on that one, but I don't have a deal to give you, unfortunately. That's the biggest thing, is I just don't have a deal to give you. But I think those 3 tools there, I think that's 100%. I mean, that's in the free newsletter. It's not hidden. It's not, there's nothing out there that's hidden. Yeah, I like it. I like it, Mike. I mean, for $89, I take 1 trade in there. Typically I'll buy like 100 shares in a lot. Say it's trading around $50. I buy 100 shares. It's $5,000. For a stock like Twilio, I make 10% over the year I paid for the subscription. And that's not including the other 12 stocks or 15 stocks that they recommend that may go up 10, 15% because they're high on the quant rating. I do think, and I will caveat everything, I do think that they require a bull market to go well. But they might be better. Yeah, Ralph Lauren is up, 32% in a year. Abercrombie & Finch is the retail killer. Okay, I got everything. Hold on, I'll be right back. Okay, I'm back. We're going to get started here. It's 9:25. Taiwan Semi's up. Cleveland Cliffs under $20 again. So anybody that got rid of that 20, kudos on you. Palantir may not go under 20 again. Okay, let's go into this. Okay. Yeah, Wynn had good earnings, and you had Penn cross up. Good morning. It's Thursday, February 8th. And you know what that today is? Today is the day that Seeking Alpha Picks finally goes on sale. Yes, you can go to the link tree, linktr.ee/daily stock pick. It is the third pick. What is Alpha Picks? Alpha Picks is discounted to $89. Keep an eye out. Make sure that you use the link to get the special offer. Blah, blah, blah. What is it? It's 2 data-driven stock picks each month. Alerts when ratings shift to sell and when new picks are added. The stock picks cover multiple sectors. Access to Alpha Picks over 20 stocks on day one. You get everything that they've done you get access to it on day one. Stocks are picked by the Seeking Alpha quantitative analysis team with no subjectivity or emotion. Alpha Picks takes into account company fundamentals, valuation, momentum growth. It is $89. Who is it for? It's designed for buy and hold investors. Alpha Picks does not require frequent trading. Alpha Picks portfolio is not designed to generate dividend income. Covers multiple sectors. This is the best opportunity to rotate between different sectors. For example, we've added a home builder stock to Alpha Picks portfolio in March of 2023, and that stock appreciated 100% in the following quarter. What should you expect from it? Overall portfolio performance. Again, it's your choice to get into. I went over it yesterday, how I'm using Alpha Picks. I basically, Twilio, and you can read my newsletter. Twilio is the most recent one that they picked. You're not going to get it over here, every time. But I showed you how I'm using it. Now, they picked Twilio, and they picked it up here at about 73, 74. And you can see right here, it's dipped down to 69. So, hold on. Why? Okay, go. I thought the dogs were done. Sorry, I know everybody likes my me yelling at the dogs, but I try and mute it as much as I can and then edit it out afterwards. But Twilio, they announced it. They said, hey, it's down 2% since they announced it. If we go over to Twilio, let's go to Seeking Alpha Picks. So Seeking Alpha Picks, I'll take you into the group because I am part of the group. But you can see the portfolio, and you just kind of go down and you look at the dates picked. And the most recent one, they're down 2%. They just buy it on the day that they put it out there. But their performance is solid, 99% versus the S&P up 32%. So it is unbelievable just how good this is. Again, it's $89 for the year. Like I said, if I buy a couple of stocks in here and I make a couple $100, I've more than doubled the money that I invested. So I'm more than happy to buy that one. And in the newsletter yesterday, I kind of put it out there. If you're getting anything out of this podcast, it should be that I use tools. And the tools that I use, and you don't have to pay for these tools, but they're set up so that, hey, there's an expensive one, there's a middle ground one, and then there's the very cheap one. TrendSpider's the first one. It's all the charts that I use. It's everything. And you can find all the links here on Linktree. But TrendSpider's the first one. It's the charts. You can go and get free charts. You don't have to use TrendSpider. It's just charts on steroids. It's got so many opportunities for you that in my mind, it is worth the yearly premium. Then there's Seeking Alpha Premium. This includes all the news articles that I go over, everything that happens. I just find it easy to go to Seeking Alpha where I don't have to use a lot of time. For instance, here on FinViz, you can go over the news articles and stuff. It just takes you to a bunch of stuff that I don't want to go through. So for $189 a year, I just consider this to save me a lot of time. It gets me the quant data. It gets me analyst recommendations. It gives me all the fundamental data on Seeking Alpha Premium. And then the third one is the cheap option. Alpha Picks. It basically, if you go to Alpha Picks and you go down to their the analysis, it takes you through everything. The portfolio review, Alpha Picks selection, what they do a webinar on it. Meta, they take you through all of the earnings for Meta. Powell Resources, it's up 50% on earnings, and they tell you why, and they tell you why it's got more room to go. Exxon removed from the AP portfolio due to the hold rating. They bring you through everything. So if you want something to start looking at some fundamental analysis by seasoned investors who put out charts, who tell you what to look at in stocks, again, $89 a year. So, and I know I've been touting this one. Just be aware too. The Seeking Alpha team sent me this in the email. Alpha Picks price is expected to rise in the upcoming weeks. We believe this sale has enormous potential and are expecting a large response. That to me is code for they're going to raise the price. So get in at $89. Don't wait. Those of you that have been around long enough know if you wait on TrendSpider, it goes from like $300 up to $1,000. So just get that one. In fact, Scott Shipley from the Facebook group, and I'll put this in the newsletter. I'm very impressed with Alpha Picks. The 7 stocks that I purchased that were strong buys are up 12% in 2 weeks. 12% in 2 weeks. So I think it's worth it. I think it's a good one. Part of it might be that he bought NVIDIA. I don't know that he bought NVIDIA. But I thought this was a great meme. NVIDIA. Wait, I can explain. Amazon, 43%. I'm only up 13%. Apple, 13%. I'm only up 2%. And then Tesla. Wait, you guys are actually making money? I love that one. I'm going to include that in the newsletter. There were some people who said they got into this Holo. Holo is a stock that it's a small cap, super small cap, but it's gone crazy and it's gone parabolic and it's gone nuts. And I bet it's halted several times. But you can see here, it had a reverse 1-for-10 split. Here's the thing. The only news that I could find on this, was that they joined a communications industry association. That's it. And you know, here's the thing. That news, I don't know if it was that news alone, but that news drove this up 2,000%. 2,000%. So those of you who put $10 into this one, I would not invest in this one. It is overbought. The 65-minute probably does great on this one, but I'm not getting into it. This one was nuts. There's also a nutso one today. HKIT, by the way, Holo is up. Let's see. Holo is up 107% today. HKIT is another one that's going nuts today. This one's up 43%. HKIT, I don't know. Let me see if HKIT has any news on it. These are just crazy one. High Tech Global, it's up 448% today. 440. I thought it was up 441%. It's up 448% today. And there's no news. There's no nothing on it. It's just a company provides information technology and consultancy services. Revenue, nothing crazy. F1 full year revisions, 100% of the revisions have been down. The gap, the PE is 9. I mean, this company's not making money. There's no reason for this to be up 400%. But those are 2 examples of craziness that's going on in the market. NVIDIA, I added some yesterday at 692. Yes, Pavan asked me, why did you add it? It was overbought. I don't understand. I wanted to get in under 700. And I read this analysis on Seeking Alpha. NVIDIA near all-time highs, yet reasonably valued with widening AI tailwinds. I am revising my investment thesis, increasing the target price from NVIDIA from $1,200 to $2,000 by 2030. Am I going to be upset buying a $700 stock if within 5 years it's doubled? No, 5 years. If it doubles in 5 years, you're doing way better than the S&P. You're doing much better than the S&P, doubling your money in 5 years. So 6 years. Say 6 years. You're doing much better than the S&P. So understand this analysis is great. The stock price, it's at 706. They have earnings here on February 21st. I think that kills it. You guys know I added to SMCI the other day. I added more NVIDIA. I just think that it's got more room to run. And this tweet out by Adam Parker, Carl Quintanilla did the tweet, but Adam Parker was on yesterday. We're in the first inning, maybe the batter's box on AI. Come on. Of course, NVIDIA is going to be a $2 trillion company before it's a $500 billion company. You're at the very early phases of something that hasn't been deployed. So if you want to know the market cap, so he thinks it's going to $2 trillion. Right now, it's at $1.7 trillion. So you've got upside even from this craziness. The forward PE is 32. Now, we went over the historic PE of this one has been all the way up near the hundreds. The PE is 92. They better raise guidance. So that's essentially what they're saying is they better raise guidance. But this is everything points towards this. We'll go over some of the earnings yesterday. But the other thing that I want to say is I will probably be making very large moves in the market this week and next week. I heard a great quote from Josh Brown yesterday, and this kind of rung a bell, and I'm hoping that it rings a bell with other people as well. And he said, in this kind of market, you invest in what works, and what doesn't work, you just kind of chalk up your losses, and then you reinvest in what's worked. Because we're at all-time highs, you have to invest in what's worked. It doesn't mean that you'll go all in on SMCI. It doesn't mean that you go all in on NVIDIA. It doesn't mean that you go all in on Apple or Amazon or Google. It just means you've got to narrow your focus. And there was a great question yesterday in the private Facebook group about, hey, I'm so over-indexed towards technology. I want to get out. Why? And Josh's quote that I heard yesterday was fantastic. He said, why do I want to own my 20th favorite stock? Why not add to my 5th favorite stock? And instead of having 20 stocks, maybe I only have 7. Maybe I only have 7 stocks that I'm actually investing in. I have my ETFs, but maybe I only have 7 stocks that I'm getting in and out of because those are the runners. Momentum is a strong force. So for me, I want to narrow my focus into what's working. Do I really want to add to my position in my 20th favorite stock? No. I want to add to my position in my top 5 stocks that are moving, that I'm actually making money on. So you want good companies with good products, with good earnings, and good management. That means I'm going to probably get rid of Oxy. Even though Warren Buffett believes in Oxy, I am going to get rid of Oxy. That means I'm probably getting rid of Devon. Took it out of the core portfolio. I'm getting rid of it. That means I'm going to get rid of DocU because DocU, I can write that loss off against some of the SMCI or other gains that I have. Mara, I'm going to get out of Mara. I believe that Bitcoin's going to have another run. I believe that Mara's going to do it. I'll probably take that loss. I don't want a dollar cost average. I'm just going to get out of it. PayPal. Gonna get rid of it. Square, I'm gonna get rid of it. Morgan Stanley, I'm gonna get rid of it. Cisco may be an opportunity. Broadcom may be an opportunity. Outside ETFs might be an opportunity. Adding ARM might be an opportunity. Adding NVIDIA might be adding Palantir, adding Snowflake, more Amazon, even Oracle. Things that are working, you want to add to. Things that are not working, get rid of them. PayPal's a great example. We'll go into this one. This goes for long, short, whatever time frame you have. People may ask, well, why aren't you adding to Apple if you have such big conviction on Apple, short-term or long-term right now? It doesn't mean that I'm getting rid of Apple. Doesn't mean that I'm trimming Apple. Apple's 60% of my brokerage portfolio. Google hasn't moved. I might dump some of that, move that towards SOXL because the chips are moving. Trying to gain some exposure, more exposure to chips. So this was a great Gene Munster quote yesterday, and this was a tweet. ARM is up 23% in the after hours. 6 months ago, there was talk we were at the peak of the AI bubble. Remember, 6 months ago, people were saying when we were going down in September, it was just a bubble. That AI stuff was just a bubble. Since then, Microsoft is up 20%, Meta is up 50%, AMD 55%, NVIDIA 56%. I don't even know what SMCI is up, but ARM is now up 48% in after hours. Gene Munster, we went over this with Parker before. He believes that we're at the start. Gene Munster, I believe we're at the start of a 3 to 5 year tech run that will end with an AI bubble. There will be a bubble. It's not now. It's not now. Earnings are showing you it's not now. So if you want to invest in some stocks with the highest upside to their price targets, here's a list. General Motors, First Solar. We'll talk about Enphase in a little bit because I think Enphase showed that maybe there's an opportunity there with solar because it's been beaten down. WBD, Ford Motor Company, Bunge, Mosaic, Borg Warner. United Airlines is 44% upside. EQT has a great dividend. Price target is 52. Upside to potential 44, where 44% from where it's trading. Dexcom, the price target is 170. So, take a look at this list if you want something that's inexpensive. Here's a list. Stocks with inexpensive valuations versus their peers. Caterpillar, still, their forward PE is only 14. The sector is 16. So that's cheap. Builders First Source. This one was one that came in the other day as a question. I mean, this might be a great one. BLDR. We can take a look at this stock. BLDR has been just moving up incredibly high. Now, here's the thing. Versus its sector, forward PE is 14. The sector is 16. So it's still cheap at 182. If we look at the long term of this one has just been a killer. And I know I said I'm not excited by it. I did a little digging. I kind of like it. Honestly, I kind of like it. I don't know. Maybe I'm high on stuff, but I do like this stock. So you can take a look at some of these. FedEx is in there. HP is in there. Kraft Heinz is in there. NXP Semiconductors, if you want the chips. On Semiconductor, Qualcomm. Their PE is 14. The sector is 18. You can see on Semi, 15. The sector is 18. So even in different sectors that have run, you can find opportunities versus the PE for cheap ones, and you can take a look there. Biggest movers of the day. Biggest mover is Disney. Disney, I said get it under 100. It's up 6%. I can look at it. We can look at it right here. There were a couple of things. One caveat on Disney, and I brought this up at the beginning on YouTube Live. Disney is up 8% at 107. Understand when I said, hey, get this at 90, I thought it was a great buy. I added through the 90s. I think my average purchase price is somewhere around 102 now, 103. I'm up. I will simply add to this. It's not a huge position for me, but long term, we can look at the weekly. Disney is trading at levels. Look at that. Trading at the levels. The world was shut down, and we were trading at those levels. Now, the PE is still expensive. Here's the caveat I want to put to you at Disney. The PE is 60. The forward PE is 18. Understand, Disney is priced to perfection because they have to hit their goals. What Bob Iger did was he basically rolled out the kitchen sink. He announced a huge buyback. He announced a reinstatement of the dividend. He announced a Moana sequel. He announced gaming investment that he's going to do. He announced everything. Streaming bundles with the sports group. He announced everything that he could. The reason he did that is because there's an activist investor named Nelson Peltz who is going after the board. This is the earnings that he had to show some type of turnaround. He had to do that because in March, they are voting for board seats. So this was everything in the kitchen sink that they could throw at it. That's why Disney is up 7%. That's why Disney was such a good play yesterday. I didn't think about it. I heard it afterwards. I should have known it. Should have loaded into this name. This was a great one, a great opportunity. The other big mover of the day was one that I did bring up as I thought it was an opportunity. I did not invest in it because there just wasn't enough information. This one was up. It is now up 40%. It's up 40%. I didn't take this one because there just wasn't enough data for me to take it. Now, the algorithm had you buy in at 72. If you listen to the algorithm on TrendSpider, you just paid for your yearly subscription because you are up almost 50%. In pre-market, markets opened up. It's trading at 106. And again, it doesn't have craziness. This all points to the with the ARM stuff, with the AMD earnings already, with the SMCI earnings, it all points to NVIDIA moving higher. It all points to NVIDIA having that huge quarter, with Meta saying they couldn't get enough NVIDIA chips. It all points to NVIDIA. Again, why'd I buy NVIDIA close to 700? The reason is I don't mind it long term. It's in my retirement account. The cash isn't taking up anything. I think it's a great opportunity to do it. I think I've invested like $20,000 in the last couple of days in it. I will pour more money into it because I want a bigger position. But those were the big two earnings. Now, the third one, the biggest stockers, movers, it's this one, PayPal. PayPal, I'm done with it. Done with it. The product presentation didn't shock the world. Why do you need to go under here now? Okay. I'll put you, there we go. I didn't mean to wake you up. Okay. The product presentation didn't shock the world. The earnings, even worse. Even worse. I mean, I have my note. The market expected too much too soon. Plus, they didn't give guidance. I'm done. I'm just done. I don't want anything to do with this company. I will be selling out. We lost this range in here. I will be probably selling it today. If I can get 57 for it, I'm happy. I'm just selling out of 3 positions. I'm going to lose probably 30-40%, but I'm getting out of this. This just shows me there's no hope in this stock. I don't want to give the CEO any more time. Remember, it's good companies with good products. This is a good company, not bad, but you look at the long-term stock price. Is it a good company with a good product? I don't know. Old people are using it. Does that stock chart look like it's a good product? No. With good earnings? Nope. That doesn't look like it's good earnings. With good management, I think management's out the door now. Until they can prove to me that they can turn some type of profit, I don't want to be in it. I'm getting out of it. My money in a bull market should be in bull places. It goes back to what I said. I don't want my 20th favorite stock. I don't want this opportunity to pass me by. I'm taking this money, I'm putting it somewhere else. So those were the earnings yesterday. We've got some earnings today. If we go over here to Savvy Trader, I think PINS reports today, if I'm correct. Savvy Trader, I like their kind of earnings layout. By the way, I'm still number one in 1 week, still number one in 1 month. I don't think I'm number one in 3 months. But after the close today, we have Motorola Solutions. We have Dexcom, which is a real Take-Two. I believe we have PINS as well. Pepsi tomorrow before the bell. We have Enbridge. Nothing huge for tomorrow. I'm going to do a short one, but we have PINS. And PINS is interesting because we had Meta kill it on the social media platform. We had Snapchat not kill it. Now, Pinterest, in my mind, I think $40. I was saying down here, I thought it was a $30 stock, buy it under 30. I think this one moved to 40. With Elliott Management in there, I think it's going to be a solid earnings quarter. I think they're going to show something. Am I betting on this one? No. Am I getting into it before earnings? No. I probably won't play this one. There are better places for my money today than some type of social media because this one is expensive. It's not, if they showed the type of meta growth, it's not expensive. Forward PE is 30, but that's on their guidance. If they blow away their guidance, that might get cut in half. If they do what Meta did, then this one's going to get cut in half. Year to date, you're up 9%. Over 1 year, you're up 53%. The average target price is $40. The most recent analysis, January 18th, they came out with a $45 price target. Well, that's 10%. That would be a great move. January 9th, BMO initiated with a $45 price target. December, Raymond James said, hey, it's a $45 price target. Here in December 2, RBC, $46. So with Meta, these guys may kill it because remember, there's an activist investor in here working to monetize the business. So I like that one. I like it a lot. Enphase, I didn't talk about it yesterday. I was so done with solar. I didn't even want to talk about the earnings on this one. This was crazy yesterday. It was at 18% on earnings. And the CEO said something, and this is essentially what the CEO sees demand improving Q1. They're working through their inventories. And so he thinks that demand is going to come back. Solar is 100% reliant on reducing rates. Don't expect solar to start soaring until we have reduced rates. I don't believe the CEO when he says, hey, we're going to have demand in Q1. I'd rather buy this at 150 and have it move to 170 than to have this one at 119 go back to 71. So in my mind, I think you wait for this, but I think solar is one you keep an eye on. Okay. There was in the Seeking Alpha Premium, I get an email, and I get an email based on just my portfolio. So I have the core portfolio in there so that I can do it. There were 2 quant ratings that changed, and that is Pepsi went from a buy to a strong buy, and this one again they have earnings tomorrow morning before the bell. This one went to a strong buy. There it is at a buy. Here it is at a strong buy. If you want it, I think it's $180 stock. I've got enough of this. I haven't sold out of it, but Pepsi's one. The other one that got upgraded, there's 3 of them, but Taiwan Semi went from a hold to a strong buy. This went from yellow to green. Okay. Revisions, B+. I mean, they already had their earnings. They killed it on earnings. It's up another 2%. If we go on, this is in the core portfolio. The thing about Taiwan Semi is it's all political. If China moves on Taiwan Semi, you're going to get destroyed. This is all of a sudden a $60 stock if China moves on Taiwan. But if you invested in the algorithm right before its earnings at $100, you're up 27% in 23 days. That is phenomenal. That is why we have it in the core portfolio. That is why I think NVIDIA has their earnings coming up with the catalyst. Roblox, could this pump on earnings again? Yes, it did. Roblox moved in Seeking Alpha. It moved from a hold to a buy. A hold to a buy. And it's not a strong buy. It's back at hold. But it did move to a buy. Let me see. Let's see the quant. Did they just not update this one? It's got the valuation is F. This one, it's up another 2% at 46. I would completely expect this to pull back to 40. I think anything below 40 on this one, you can buy. It is not at its highs. If we go and we look at a weekly on this one, you got a long way to go to get back to your $100 range. It is expensive. It is too expensive. So just understand that one is one that I think is a trade. It is in the core portfolio, and I like it. Google rebranded their AI chatbot. Instead of Bard, it's now all Gemini, and they're monetizing it. That's the key point. They're monetizing their AI. Google didn't react because everybody wants to see the proof in the pudding. It's all priced in. You've got a gap up here to 152. Why I said I was going to trim some Google. It's just because Google has some weakness in it. And the weakness is because if you go and you do a search on Gemini or Bard, it costs them like $1. If you go and do a regular Google search, it costs them less than a cent. So the power consumption, that's what's causing this. It's the data processing power. How do you invest in that? You invest in SMCI, which actually does the most energy efficient AI rigs. They put them together as energy efficient. So it's saving Google money. Google and Meta and those guys, they're all clamoring to get SMCI's rigs. They just can't do enough of it. So, but I think Google it should be in your portfolio. I just may trim it. Alex Tamayo from Spotify asked, what's the good dividends long-term stock play for the day? Listen, I hate dividends. Alex, I hate dividends. I would tell you REITs and energy have great dividends, or use the covered call ETFs. I have an entire list of covered call ETFs in TrendSpider. Covered call ETFs like JEPI, like SPY-I, like JETQ, QYLE, XYLD. The entire list is there in TrendSpider. So if you sign up for TrendSpider, I send you that. And that list. And it's not hard to find. You can just go and look at covered call ETFs. I don't worry about, if you want dividends, I don't know how old you are, Alex, but if you're 70, and maybe 75 years old, and you need some income to pay for, the managed care that you're getting, yeah, get dividends. But if you're 20, why would you want dividends? I don't want dividends. I want the company to take the money that they're making and invest it back in the business in order to grow. My style has not been dividends. If you want some of the core, look up here's what you do. You go over to Savvy Trader, okay? Go over to Savvy Trader. I've got a core portfolio over here, and you can research these names, because this isn't something that you actually douche on the internet. But the core portfolio has a list of 34 names in it. You can look up which ones have a great dividend. I know Simon Property Group, great dividend. Oxy, decent dividend. Coke, good dividend. MPLX, great dividend. But look up these for your dividend. I mean, again, you have to, if you're trying to decide on dividends, my show probably isn't this. You can't rely on dividends on my portfolio. You're relying on growth. Matt, hey Gary, I've been a long-time listener. I have a small portfolio under 50,000. I've been putting a lot of interest in watching it and trying to build it. I'm trying to diversify since I have a lot of exposure into tech. Oh, here's the tech. Just seeing what your thoughts on McKesson, MCK. Boy, this was, I think John Oliver did a thing about McKesson. It has a great run over the past year, recently with the 5% gain since mid-January. Also, someone like me, I am curious what your stance on stop losses and when and how should I be using. I don't use stop losses. I'm the worst at capital, savings. I mean, stop losses for me are if you expect that a good example. Fortinet. I should have had a stop loss at 70 when it ran to 75. I didn't. Sold it at 68. So I lost $2, $200. Big deal. But I don't use stop losses enough. You should use them. There's plenty of articles out there on stop losses. But typically what you want to do at 52-week highs is put a stop loss in so that you don't lose your gains. If you're trading short term, put your stop losses in to lock in the gains. Just choose a percentage. You can put those stop losses in. I like stop loss limits instead of stop losses. But again, do your research on that one. McKesson, now let's see. Algorithm makes you 48%. Buying and holding makes you 87%. This has been a great stock. I would probably just get into this one to buy and hold. But look at that. I mean, just, since the pandemic, since 2020, you're up 261%. Is it unfounded? Let's take a look at some of the financials here on FinViz. The PE is 22, forward PE of 16. Not crazy at all. 0.47% dividend. Alex probably hates it. 0.47%. Performance year to date up 8%. Over 1 year, 37%. Average target price, 518. Its 52-week high was 519. You have 3.6% to get up to that high. I mean, it's running at highs. January 3rd, Barclays, overweight, 537 is what the price target. So it's up, 6%, 7%. December, Wells Fargo, equal weight, 502. You're already at 502. So what are they going to do? Raise their guidance? I don't know. Let's see about insider buys. Everybody's selling. They're selling in big lots at 457, 480. That's just an options exercise. The CEO's selling, what, $16 million here between November and January, between 457 and 480, and it's at 500 today. Oh God, look at all the CEOs selling. Brian Tyler, the CEO, has been selling since June, and he's selling somewhere in the neighborhood of $40 million worth. The dude probably has even more than that, but that's a lot of insider selling. I don't know. I mean, again, this is a consulting company, and I think John Oliver did do an episode on this. Now it's got a hold from the quant. The valuation is an F. I don't know why the valuation is. It's 3 of 9 in the healthcare sector. Cardinal Health is the number one. Speaking of healthcare, my company, Oscar Health, OSCR, this one has been killing it. And I brought it up on their last earnings. They're up 21% today, and they're not making money. They're not making money. But yeah, this is Oscar Health. It's listed as a financial life and health insurance. It's a health insurance company. They're not making money, but they announced earnings and they're not profitable. But the last couple of times over 1 year, this is up 323%. Over 5 years, you don't have it, but it's over year to date. This one's up 78%. We're February 8th, and you've almost doubled your money in this one for 1 year. So yeah. Ryan McKesson, it looks good. I don't know. It's a consultant firm, I think. But I could be wrong. It didn't look bad. Greg Michaels, looking at some preferred ETFs, PFXF is one of them. Discount to NAV chart, not great, but COVID and high rates pushed it down, so may have some upside. I take 15% of my portfolio as an income play. I know not your area of interest, but thought I would get your take on it. PFXF. PFXF. Dyslexia is coming into play there. Let's look. Sell. I mean, the two red bars, Seeking Alphas and the Quant, taxable bond. This doesn't get me excited. I mean, it just does. PFXF. I don't know why. Greg, are you sitting in a rocking chair? Do you need managed healthcare? Dividends. Let's see. What is it? VanEck. Let's see. Dividend. What does it pay? Its dividend is 7.84. I mean, it probably pays out everything that it makes. So, and that's the dividend yield. But 4 hour, you could trade it. You lose 1% versus buying and holding makes you loses you 14% for 2 years. I mean, they're paying 7% dividend. Ironic, you lose 14%. So if you need the income, I'd say you're better off buying a bond. I'd rather buy a bond. I mean, if you need income, you're getting 5%. Why take a dividend of 7% when you can just buy a 10-year bond at close to 5%? Maybe it's right now 4.15. Okay, but it's Treasury, and you don't pay taxes on it. Yeah, I mean you don't pay taxes on a Treasury bond. So if you want that, don't buy a Treasury bond in your retirement account, but just buy a bond. White Rabbit, great episode. Can you explain how you set your volume price start point 6 months for Twilio analysis specifically? I wrote back to White Rabbit. It's a TrendSpider specific. And the way I learned about this this volume by price is that I learned, and I think it was from the person on TrendSpider before Jason. I forget his name, but he's now on Twitter, and I follow him. Why did I pull it back here for Twilio? I pulled it back here to February. I think I pulled it back here. I may have pulled it back here only. Yeah, I may have pulled it closer. The closer you can get, the better you are, because it gives you a better sense of where people are buying. So for instance, if I pull this, and it's all these over here to the right, it's those bars, and this is volume by price. So TrendSpider does this. You want it to a higher area than where you're currently trading. because if it's a higher area than you're currently trading, you can see if other people are still holding it. So if I pull it back here, it's right about where you're trading, and it's March of last year, and you can see there's not a whole hell of a lot of people still holding up here. So what makes me think that the price is going to hold up there? There's not a whole hell of a lot of people buying over here. So what makes me think that it's going to hold there? They have earnings coming out on February 14th, 15th. Yeah, February 14th after the bell. So, I mean, you're kind of hoping that maybe it doesn't have that great of earnings and you can buy it. It's an alpha pick, but that's how I use it. You don't want to put it like down here. Okay. For instance, if I bring it down here, I didn't grab it. Hold on. If I bring it over here and I bring it to a low, I can see there wasn't a whole lot of buying down here. They've all gotten out when it got up here. Okay. They all took their profits down here at 40. Everybody took their profits. But if you bring it back here, you're basically saying, okay, who's bought and who's still holding? And you want to move it as close to the chart, the current level as you can. But you don't want to put it at the low right here because you won't have anybody buying up here. If we put it at the low down here, this kind of gives, the way I was taught and the way the logic that was put about to me was, if I bring this over to here, say I bring it to the algorithm buy at about 50 right there, okay? You're going to see, okay, where's everyone buying? Everybody down here at 50 got rid of it because they've already taken their profits. The majority of people are up here, and that's because that's where it's been in a trading range for recent time. But you don't want to do it down there because this is giving you a false sense that, oh my God, there's so many people buying it here. So you want to bring it back a little wider, right, Rabbit? That's the way I heard it. Nick from Canada. So I think you said you had $30 in IONQ. Yes, I have $30 in IONQ. I noticed they moved up earnings from the research I did. When a company, especially small mid-cap, moves earnings, it's very often results in positive earnings. Thoughts? Something, there's something there, or is it? When a company moves earnings, I don't think there's anything other than something changed. And it doesn't mean good, doesn't mean bad. Let's look at IONQ. They're supposed to announce earnings on February 28th. Let's look at it in Seeking Alpha, see if there's any news on them moving earnings. IONQ is a long shot. This is in quantum computing. Let's see if there's any news on this. Files for $500 million, mixed shelf CFO emphasized. It is for potential M&A. So that was on November 9th. There's no news. I don't see any news about them moving earnings. Maybe they did, but it's a high risk of performing badly. Learn why. We click on here. Has characteristics which have been historically associated with poor stock performance. Its net income per employee cash flow. That's why it's viewed as poorly. This is a company that's not making money. They're doing quantum computing. It's ranked 26 out of 26 in information technology. Guess what's number one? SMCI. They're in different industries there, but this is just wow. ARM is up 61%. It's at 124 right now. ARM is flying. But yeah, that's what the CEO speaking on TV. IONQ, I don't see any. I mean, I'm not pouring money into this. I don't think there's anything crazy about it. Friday, December 29th, this was all the way 2 months ago, has the potential to become a long-term compounder. There's not a lot of information out there. This is a company that's not making money. Nick, don't pour your savings into this. This is something that deserves $30, $50. Maybe it turns into $100. But there's a lot of things that have to go right for this to turn into a $100 stock. A lot that needs to go right because they're not making money. They're more likely to dilute you than they are to actually turn a profit. So they have a low cash burn. That's true. Currently holding a significant amount of cash. That's true because they just took it out in November. And short-term investment to continue funding operations. They're fine. But I'm not upping my amount here. Algorithm got you in at 1037. You're at 1072. Nice move. I mean, you get a couple of percent out of here. I think, again, long term, am I pouring money into this? Absolutely not. I said this down here. It's about $9.37. You're seeing it bounce right off there. There's a couple of places where it's just putting in there. Scans, we had a ton. We had a ton of scans. Oxy just gotten a vote of confidence with a cross up here. If you wanted to buy under 60, 57.67. Warren Buffett is buying a ton of this. Pan W just got a cross up here. It's in the middle of a current move. $2.99. If you bought that one, you are happy because it's trading at $3.66 right now. You know what else just got a cross up is Apple. I say this, and I say this way too often, but Apple under, I'm going to remove all of these annotations because this is part of a newsletter that I'm doing with my weekly stock pick. But here, Apple, 189.13. If you can get it under 190, I think you're fine. If you get it under 180, I think you're doing fantastic. The Vision Pro is a new line, a new wearable. It's a new source of income. It's going to be crazy. QQQ got a cross up. This is part of this current bull run, 407.64. If you're in at 407 like I was, you're happy because you're 432. Goldman Sachs, financials, don't sleep on financials. Goldman Sachs is in the core portfolio. This one I was saying buy at 300 when it was 300 back here in November. Book value I think is 319 or so. But here 390 makes sense. I mean, it's putting in its capitulation right here. Is that the move higher? I don't know. If we go to a weekly chart, your all-time highs here are in the 400s. So you still have room to go to get to the all-time highs. Is it time to go into that one? For me, the one scan that I would do from financials today, it would be Schwab. I'd rather have Schwab than Goldman Sachs, 62.43. You're buying on weakness. It took out your dividend. Yesterday was the ex-dividend date, or today might be the ex-dividend date, February 8th. But it was at open. So you had to own it as of last night. MACD is down there. RSI just kind of capitulating under here. It's completely oversold. But I do think you see a pop to 70. So 60 to 70, probably a good one to buy. A couple of energy stocks. We had CrowdStrike with another cross up. Another bullish signal on CrowdStrike. Can you go any higher? It's up 0.7%. But this one has a cross up right here that's just, it's overbought. Why am I buying NVIDIA when I say it's too expensive when I'm not buying a CrowdStrike? Well, NVIDIA, we can look at NVIDIA. NVIDIA is making money. NVIDIA here is making money. They have a PE of 32, a PE of 92, forward PE of 32. CrowdStrike is not making money. Their forward PE is 85. It is more expensive than NVIDIA. Which one would I rather own? An expensive CrowdStrike or an inexpensive, comparatively, NVIDIA? I'd rather own an inexpensive NVIDIA. So that's how you kind of take a look at stocks. I will include all of these in the newsletter. It's free, so go and sign up. Bulls. This is the FANG 3 times levered, BULZ, 3 times levered upside for bulls. If this is just another leg, but again, 102. If you're in at 102, you're happy because you're at 130. HIBL, which is the 3 times levered bull of the S&P. We just hit 5,000. This one, if you're in at 39, you're happy because you're at 41. You shouldn't own these for more than a day, though. You know what else just got another cross up? Was TQQQ. I got out of this one at 54. We're at 58. I got out of 54. I got out during this weakness. The algorithm didn't get you out. I got out. I got out because I got nervous, didn't want to hold it over the weekend. I didn't buy back in. I should have bought back in. But it's at 58. Am I upset that I didn't buy? No. The MACD's not doing horribly. It's not at its all-time highs like it was up here where you were at 50, 59, 57. Again, you want to hold these for a day. You want to trade them. You don't want to own these for a long time. Low-cost ETFs, there's a ton of them. QQQM. We talked about QQQ having a cross-up. QQQM is a slightly cheaper version of the Qs of QQQ. It's just another, Invesco NASDAQ 100 ETF. Different in the thing. The MACD was crossing up. I bought some at 167. I bought some back when I bought QQQ. So if you have any questions, hit me up. Remember, if you made it this far, you like me. So go over to the link tree. You can buy TrendSpider. There are 3 options on TrendSpider. There is a 7-day trial period, For $29, you'll still get my algorithm. You'll still get everything for $29. It's billed at $149 after the trial ends. If you just want to go on a month, you pay for a month, so you don't pay for a full year. But it's $129 per month. You can save $20 off this test drive one. $129 you just pay per month. If you want the first month, pay $129. If you know me and you've been listening for a while and you want TrendSpider, it's $892 for a year, $74 a month. If you're not making $74 a month with the algorithm, with investing, and this isn't helping you, remember, this isn't just about making the money. It's about making sure that you're getting out in time and saving the money on the downturn as well. That's the crazy part, is it's not just making money. Say we have a 20% pullback. Not in a day, because if we have a 20% pullback in a day, you got more problems than we know what to do with. But say you have a 20% pullback over a couple of weeks. Within the first couple of days, you're going to see that button hook. You're going to see the MACD cross down. You're going to see some stuff. You can take some action based on the charts. So, yeah. TrendSpider, that's the first one. Seeking Alpha, the premium version. Remember, the premium gets you all the articles and everything. It's $189 off. You get a $50 off coupon if you use my link. Alpha Picks. This is the picks where you get 2 picks per month, beginning and middle of the month. This month's pick is Twilio. You can read all of the articles on it while you're doing it. I say, do not follow a douche on the internet. So while I tell you that Twilio is the thing, you want to do your own research and understand why Alpha Picks picked it. You want to do your own research. Webull. If you're not in Webull, throw $1,000 into Webull. What am I at right now? I think I'm at 4,600. Yeah, $4,600. I'm at $4,600. Sign up for Webull. Use this link. You get free stocks when you sign up. And the main thing is make sure you're signed up for the newsletter. It is free. There is a paid option here, but it is absolutely 100% free during the week. I try and do my best to publish it. It is usually a 2 to 5 minute read. If you're not, taking 2 to 5 minutes to take a look at the market, I try and cover as many stories as I can. I try and tell you exactly what I'm doing. And again, if you're going to follow a douche on the internet, it might as well be somebody ethical like me who's not trying to take your money. But I'll tell you exactly what I'm doing. So the most popular ones, there is one, confirmation MACD, buy or sell, PE cross, 1227 timely, and Katie say XLF. Let's look. You know what? Let's take a look. I wanted to look at XLF versus XLK because I want to see. So far in the first month, I think I'm completely wrong on XLF being the one of for the year. XLF is up 5% for year to date. Let's see, up 3%. S&P is up 4.72. Let's check XLK. XLK, because that's going to be the technology. That's doubling XLF. Hey, 3% in a freaking month, 1 month and 8 days. You ought to be happy that I put that one in, because XLF is actually doing much better than many other stocks. But that's a good one. XLK, I personally own. I own IGM. I own a bunch of those technology ETFs that I really, really like. Okay. Take care. I will see you for a quick podcast tomorrow. It will be super fast. Take care. Bye. Okay. Let me go grab my laptop. Let's see. I got a dog snoring behind me. Do 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 do. Dan, let's look at. I don't think any of those. I don't think anything with the miners is a buy long term. I mean, let me be perfectly clear. I don't think it's a buy long term. I think you trade them. And Riot 1014. I mean, algorithm got you in at 1014, Daniel. But it's incredibly expensive. Riot, they're not making money. Their price to sales is 9.53. If you look at Mara, their forward PE is 12,665. Their price to sales is 16. So trade these. Don't own them. So no, the answer is no. It's not. ELF is a great one. ELF is doing well. So no, Dan, Riot is not a buy. ELF is up 3% at 170. That's a great one. You're out of Holo at 40. What's Holo at now? Holo's at 22 now. Holo's only up 22%. I bet there were a bunch of halts. Let's see. Here's the 5-minute chart. I'm going to add in extended hours. Display extended hours. Yeah, it opened up and you got the rug pull. Kudos, Maxwell. 9% in a week is awesome. Cisco, I like. Cisco's just one of those companies that I think they'll do perfectly fine. Cisco's up 0.2. I think anything under 50 on Cisco, I think you're good. You did, Scott. I brought up your comment about Alpha Picks. Anthony, pins will not be stuck in the snap problem. But pins is a little bit expensive if their forward PE is 30, which means they have to be in line with their forward projections. It's not making money. If we go over here to Seeking Alpha and we look at pins on a summary, I may buy 5,000. I may buy 100 shares of pins. You know what? Fuck it. Let's see. Tapestry. Pinterest stock will garner attention with the image sharing social network scheduled to announce Q4. Result after the bell. Expect Pins to earn 51 cents per share on revenue of $990 million. Investors will be looking at the company's user growth and the stability of its advertising sales, especially after a strong showing from Meta last week laid to rest slowdown concerns. Pins, in its latest quarterly report, showed its monthly active user had hit a record 482 million, with a chunk of it being Gen Z users. I mean, Pinterest, the most recent, everybody's putting it at 45. You know what? Fuck it. I'm going to play Pins. You know what? I'm going to play it in my... Hold on. I got to get my laptop. I learned with ARM yesterday. Why not play Pins? Oh, God. My battery's dead. you guys are gonna. Oh, you're not gonna see me. But I'm going to. I've got to send these 3 files over. Share. AirDrop. I love Apple. It'll come up. We're going to put it to MacBook Pro. And then I'm going to go to a 5-minute chart here. It's now 10:27. What's the 1 minute look like? Okay. Sending. I'm going to buy. I'll probably sell pins right after the report. Let's go to the trading dashboard. $14.65. This is just gambling. Buy 100, order type limit. $40.70. I'm gonna buy it $40.65. If it hits, great. Oh, that account. Okay. $40.65. If it hits, I don't, Zephin. I'm out of PayPal. I'll be selling it over the next week or so. Okay. And with that, I'm out of here. I got to go edit this mofo. But I put in that order. If it hits $40.65, I'm happy. If it doesn't, I think you're going to get to, I mean, if you look at the long term of pins, you're just above your 50-day, your 200-day, I'm sorry. It's moved quite a bit since its last earnings, but that's because they should have a positive showing. Scott's in Vegas. You in there for the Super Bowl? HKIT. I don't even know what these guys do. HKIT is hanging. Seven, you may be behind in commenting a little late. Okay, pins is running up from where I put in the order, so I may not get it. But if I don't, no biggie. What is this saying? Wow, why am I down so much? Oh, it's Apple. It's all my Apple. NVIDIA, I'll buy more as it dips down. Zefin's a believer. I'm not gonna knock you that you're a believer. I'm just not gonna. I'm not believing. Now, Eli Lilly, I should have bought under 700. That was a mistake. Qualcomm's popping. 1.4%. Roblox is popping. Shopify is popping. Don't sleep on Shopify, man. Their earnings are coming out next week. I've got a bunch. How much do I own? My Shopify was worth somewhere near $100,000. It's not worth $100,000 now. I'm still positive. I dollar cost my average way up, so I own more. But don't fall asleep on this one. It's broken through its 200-day, which is now 80. 80 is the support level. 157. This was way up here. I think I started buying around here. Yeah, I think all of the... Mara's up 12%. Trade them. You trade them. You don't own them. He asked before, who was it? Dan asked, he asked specifically, Dan, Riot Platforms, is this buy long term? No. Trade it. You want a company that with good products, and they don't have anything that's specifically great, and its price to sales, they're losing $284 million. They have earnings coming out next week. It's already priced in the earnings. So, this could shoot up on huge news, but I can't imagine they say something that's out of the realm of, you look here. Where's everybody holding from July? Everybody's holding right here. What's pulling it up here? Just a couple of people. Mara, I still have Mara. I'll be getting out of Mara probably soon. Again, in my mind, there's better places for your money. If we look here, I'll show you. We pull it back to the most recent highs. December, I am owning up here. I am one of these people. I am part of this. What? It doesn't tell me how much. It's millions and millions of shareholders. But the majority of people are holding down here at 18. So you've got quite a gap to go through between 19 and 22 to make it back up there. But do you have it in it? Could be. I mean, it could be. SMCI is going for a run. NVIDIA is going for a run. Did Pinterest get? Let's see. No. Oh. Pinterest went for quite a run after I put in that order. I should have bought it at $40.70. Pinterest is going for a run. Here, let me start this video editing that I've got to do. We're going to get rid of these and then go in here and okay. And we're how is that so red? What the hell? Wait. Oh. Okay. We're gonna copy and we're gonna paste adjustments. All. I don't know why that one's so red. Okay. And we'll do paste adjustments. There we go.
What is best? 69. So here it's dipped down to 69. Here it's 69. Sorry, I know everybody likes arrows. It's dipped down to 69. Sorry, I know everybody likes my me yelling at the dogs, but I try and mute it as much as I can and then edit it out afterwards. But Twilly didn't shock the world. The product presentation didn't shock the world. It didn't shock the world. The earnings even didn't shock the world.
There we go. And what? Green screen, blue screen. This is what I do all day. Green, blue screen, copy. And we're gonna export file to 8 pod. Why are you crying? Let's see. Ultimate degen. Yeah. I think here's the thing. Shopify is expensive, but what people don't know about Shopify is that the CEO, I forget his name, Shop CEO, J.R. Riddinger. I like him. And he bought a whole bunch of stock in the companies that use his platform. So he basically would, at the early days of Shopify, he would ask people, hey, I want to buy, stock in your company and invest in your company. These guys all think that it's downgrade and it's not good and blah, blah, blah. Average target price is 77. I think they're going to come in with a killer quarter. It's expensive. The forward PE is 85. So they've got to grow like nobody's business. Am I adding it here? No. Let me be clear. Am I adding Shopify here? No. Could I be wrong? Yes. But I do think from a long-term perspective, I think 80 is your support. And I think closer to 80 is better. But that 200-day right at 82, I don't think that's a crazy price to pay for it, to be honest. Meta's just a killer company. And no, I wouldn't call buying calls on that one. Degen, that was kind of, hey, we all should have known it. ANET's a great one. Arista. This one I think this one's an unsung AI play. Let's see. ANET. I didn't put it in the right place. Disney's at 109 now. God. Buy. I mean, the valuation's the only thing that's dinging it down. I like that one. Okay, now I've got to run. I'm going to head out. I will see you guys tomorrow morning for a quick podcast. Just be aware it's going to be a quick one. So if you're waking up early, don't feel like you have to be here. More than likely it's going to be, hey, there's a sale on Seeking Alpha Picks. And don't forget this weekend, sell out of your triple Qs. Okay, I'll talk to you later. Bye.